Good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, November 10th. We had two swing trades, which we finally closed out this morning, last night. No scalp trades, and really not much economic news to speak about. We'll touch base on one thing real briefly. The two trades, we did pull out 13.1 pips on a size-adjusted basis. On a non-size adjusted basis, it was approximately 130 pips. Both trades were 10% of normal size. As far as the economic news I wanted to touch base on was out of China late last night. They came out with their October CPI, which came in at a negative 0.3%. So you could really say that's deflation, right? I mean, it was a negative growth, which is obviously deflation. Granted, it's only for 1 month, and it's not an annualized number, but it could be a trend, which is not, you don't want to see. We've been saying all along, Japan's in deflation. Some of the countries in Europe is in deflation. The others are on the cusp of deflation. United States, we're on the cusp of deflation. China, which has been the most robust economy in the world for the past 15 years, here it is on the cusp of deflation, an actual deflationary number for 1 month. It could be a trend, so we have to follow it and see what happens. Obviously, we've been saying their economy is slowing down, very quickly is slowing down, and this is a direct result of what we're talking about. And it's funny because yesterday you had members of the ECB talking about lowering interest rates even more negative, to possibly increasing their QE. You've got Japan continually doing their QE. You have China now, deflationary numbers, economy grinding to a halt. A lot of questions are, what are they going to do for their stimulus? They've already started a stimulus package. How much more are they going to increase their stimulus package? And here we are, Janet Yellen and the Federal Reserve governors, saying everything is so rosy, that things around the world, the risks from around the world have moderated and going to the wayside. They're either so right and the rest of us on Wall Street are so wrong, or they are the most biggest bumbling idiots. I mean, that's it. You can't make up an excuse. If they're wrong and the rest of us are all right, which I would put my money on the rest of us being right, they're going to look terrible. I got to tell you, the Fed, Janet Yellen, they're going to, all of them, no matter who it is, all the Fed governors, they're going to look like a bunch of idiots. If all of us are wrong, well, so be it. We're Wall Street. This is what we do. We make predictions. Some of the big guys, they put their, large amounts of money where their mouth is. Maybe they're not traders, they're more of investors, right? So we're in and out of markets, so it doesn't impact us as much because we have a lot of cash on hand. But guys that are heavily invested, long-term investments, if these guys are wrong, well, they're wrong, okay? And they cover their bets and they cover their losses and whatever. They're going to have some wins in there because they're going to be somewhat hedged. But the Fed, this is what they do. I mean, this is their main job. A mutual fund or a hedge fund manager, their main job is to make their clients money, but they can make it on both sides of the coin, right? So they can be long, they can be short, they can be somewhat hedged, somewhat neutral, and somehow finagle, even if they take losses, make the losses not be so bad as the overall market. But the Fed, they have no other job other than to gear and guide the economy and interest rates. So if they're wrong, it's going to not look good for us. And I can't imagine that they're right. How has China been the biggest growth economy for the past 15, 20 years? Well, obviously, we here in the States, everything gets offshored, right? We are about an 80% services economy. The other 20% of the economy is, manufacturing and building and whatnot. Many of the products that are even designed here in the States. Take Apple Computer, for example. Apple Computer designs their phone, their iPhone. They do the design here and whatnot, but they end up, the manufacturing goes overseas, whether it's in China, South Korea, wherever it is, doesn't really matter. It's my point. What I'm trying to get my point is that so much is outsourced, right? And it's not just here in the United States. You go to Germany. There's a lot of things outsourced in Germany. You go to France. A lot of things are outsourced out of France. And they go, where do they go? Mostly China, because China has extremely low labor costs. So if China, and that's the bulk of their economy, is from other major economies outsourcing products to China. If China's economy is slowing, well, it must be slowing because the outsourcing is being slow. They're not getting as many jobs. Pretty basic stuff, right? You don't have to be a rocket scientist to figure this out. So I don't think the majority of us on Wall Street are wrong. I'll tell you that right now. Anyway, so that's enough of my rambling for the day. Let's get to the two trades. First one you're looking at here was, like I said, they're both swings. New Zealand dollar, US dollar, we were short this from 0.65830. Small enough position to hold it through the non-farm payrolls. It came flying down. We didn't cover as it came down. We thought it was going to come even further. Thought it was going to break the figure of 65. It held it, bounced up, came to 65.50, had that area of a problem, and it's been going between about 65, call it 20, and 65.50. We ended up covering this morning around 0.65408, picking up 42.2 pips, or size adjusted 4.2. Second trade is a swing in euro pound. We don't trade this very often. It doesn't move. This one doesn't move as fast as other pairs, but if you make 1 pip on euro pound, whether on a short or long side, if it's a profit or even a loss, whatever your 1 pip is, it's equivalent to about 1.5 pips when converted to US dollars. So as you see here, we were short from 0.71450. Covered this morning as it broke down through the figure of 71. We covered 0.70855. We moved our profit. Our profit target was a little lower, but we didn't want it to come back up through 71, so we kept adjusting down. For every 10 pips, it would move. So when it broke 71, went to 71.85, we put 71.90. Excuse me, 70.95. When it went to 70.80, we went to 70.90. When it went to 70.75, we went to 70.85. And obviously it bounced and took us out at 0.70855 or 59.5 pips. You have to adjust that, right, for 1.5 equivalent to US dollars, makes it 89.2 pips, or size adjusted 8.9 pips, for a total of 13.1 pips on a size adjusted basis. So we'll take it, just no scalps. There was actually a scalp this morning. We'll be doing that in tomorrow's video, as it was late this morning. Euro Canadian, I believe it was, if I remember correctly. Yes, Euro Canadian dollar, which we did pretty well on. It was a scalp. We pieced out. Last piece was pushed on a break even, but we'll go over that video tomorrow or Thursday. Tomorrow is Veterans Day. Banks are closed. Bond market's closed, so most likely will not be trading as volume will be very low because of the banks being closed. Banks are the major players in the currency market. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And have a great rest of your day. Like I said, probably won't do a video tomorrow, so look for a video come Thursday. Have a great rest of your day.